Buyers are waiting to see what happens in September with the interest rate hike. I predicted last time 0.75, I was wrong. It was 1%. This time I'm predicting 0.75. Hi everyone and welcome to Reality Check. Well, we'll discuss what's happening in Toronto's real estate market, hopefully where it's going, and help you make informed decision when buying or selling real estate. My name is Nima and I'm here with my co-host Devani Zito. Now let's get into it. Since last month we were here, that things looked kind of okay-ish. Sales are down pretty much year over 47%. And month over month, we're looking at about 24% drop. And let's not talk about the sales price. Like the average sale price right now is sitting at $1,074,000.
Well, I think people were expecting, it to be worse. So,
well, I mean, like at the peak of the market, that was just over 1.3 million. Actually, they revised the price because it used to be February 1,301,000. Now it's 1,334,000. I guess like they accounted for a bunch of missed transactions. We're down 19%. But overall, compared to last July, we're still up by 1.2% for the whole GTA. So one thing I want to mention is the graph that we have, the 20-year average graph. The 20-year average graph for sales volume sits at just over 8,000. And if you can see on this graph, last year we were over 9,000. 2020, a lot. Just coming out of the first lockdown, I'm guessing, we're over 11,000. I mean, this graph is pretty steep to show that we're just over 4,900 sales. We're at the lowest level of sales in the last 20 years.
We are also, though, in the summer months, and this is traditionally a little bit slower. So there is that to factor in. Also,
it's I think it's the first summer that people can actually travel. I mean, look at what's going on with the Pearson. People are
passport
rushing
offices, everything is jammed.
So everything is kind of goes hand in hand. People are rushing to, get on vacation before September.
I mean, even you went away. You were like,
there was not much to do. I said it in the last video, there's not much to do, so I'm going to go.
Let's go.
As soon as we went, we did a bunch of deals, so that was good.
It's always like that, eh?
Yeah.
You book a flight and you get busy.
I got to go away more.
I know.
Exactly. So with the sales, few things that affected it was the interest rate hike. We had a 100 basis point interest rate hike. People are kind of enjoying the summer, and everyone's playing the wait and see game. Buyers are waiting to see what happens in September with the interest rate hike. I predicted last time 0.75, I was wrong. It was 1%. This time I'm predicting 0.75. What do you think?
I actually am as well.
Yeah. So
I don't think a full other point.
Okay.
But
so if it's 0.75, then again, there's gonna be another shock in the market, but hopefully we'll see. There's a lot of people on the sideline, and also consider the fact that there's a lot of immigration happening. A lot of people are coming to this country that need a place to live. So all the fundamentals are there. So let's start with also active listings too.
I mean, I don't even want to jump into this because it's a whole probably next month for this month, but I'm noticing a little bit of a change in the market if we're looking at last month's numbers.
Yeah.
But I'm feeling it different. Being on the field right now, I'm noticing I'm seeing some multiples.
Yeah.
I'm not talking about the rents. I'm talking about the detached, the semis. Just yesterday. There was 10 offers on an Oakville property.
Oakville, yeah. And even on, we had a couple of condo listings that
7
we got multiple
on the
offers.
other one in Riverdale.
Yeah. So there are pockets that are still hot.
Yeah.
But one thing that worth mentioning is that the active listings right now is sitting just over 15,000 active listings. Last month, it was over 16,000. So one thing that we usually see with the raising interest rate is that listings pile up. Here, we're not seeing that. And the main reason for that is unemployment. The unemployment levels are really low. And this is why people can hold on to their property. They don't have to sell it.
Unless they really have to, right?
Yeah. And right now we don't see that. So if they're not getting their price, they take it off the market. And this is why the sales to listing ratio has actually improved this month compared to last month, because the active listings have dropped. Although the sales are dropping, the active listing is dropping. And this is why we're going to talk about it later.
In the months of inventory?
In the month of inventory, it's going to have a huge effect that we're not probably going to see crazy buyer's market in the coming months.
I don't think we've ever seen a crazy buyer's market.
No.
Or not for a long period of time anyhow.
Exactly. And usually in Toronto, because everything is like seller's market, once you go over 2 months of inventory, people tend to think
that they're in control and they're in the driver's seat, but really it's just a simple balanced market.
So right now we're in 3 months. 3 months, we're balanced. If we go over 4 months, hopefully, we'll see some price reductions. On to the second part, average prices. So average price is sitting at $1,074,000 for all housing types. Let's look at the graph. I mean, we peaked in February, $1,334,000, 19% drop right now to about $1,074,000-$75,000. Overall, it's 19%. When we actually go look at different segments, things kind of look differently, especially in detached market.
When you say segments, you mean different house types.
Housing types, yeah. Detached condos, townhomes. So let's look at the detached. I mean, like we previously compared the detached market in York region with Toronto, and usually York region tends to have more volatility and more drop. So previously we're just below 400,000. Now the average detached in York region has dropped by $413,000 since the peak in February. We're sitting at about $1,580,000 for an average price of a detached in York. In Toronto, funny enough, we're sitting below that. We're at $1,515,000. And that's, I think, the first time I've seen the average price of Toronto be below the detached market in York region.
Why do you think that is, though?
So I looked at average prices and the sale amounts. So majority of the sales that are happening in Toronto market are happening in the lower prices of the detached market. And one thing to mention about the detached is the luxury market over $4 million has been hit drastically. This number of sales have dropped so much so that in a section of Toronto, C12, Bayview and York Mills, goes all the way from 401 all the way to Lawrence. There was only one sale for detached home in the month of July. Out of 83 active listings, only one home sold. I mean, like that's, what is it? Like that's probably 80 years of a month of inventory. Like one home only selling. There's nothing selling. So this is why the luxury market has been hit. And this is the reason why we see the drop. So the drop in detached market in Toronto has been $558,000 since February, which is huge. But again, reason is the luxury market has been hit pretty hard right now, and not a lot of transactions are happening. There's only few transactions, and because of that, the average is skewed. So overall detached prices in Toronto are down by 3% compared to last year this time. So prices for detached are lower right now. But condo market is up by 7%. And again, that's due to the affordability. The average condo has dropped by about $60,000, $70,000. And in a lot of areas, actually, it's still higher average price than last year. We're talking about February. Since February, they're down about $67,000. Since last year, they're still up by about 7%. So one thing that we're going to mention also is the 20-year average for the average prices. We're always hovering around 7%, 7.1, 7.2. Right now, for the 20-year average price, we're up every year, year over year, 8.1%. I think this is the first time I've seen it over 8%.
People want to purchase an investment and they say, how much do I anticipate this appreciating next year? Traditionally, it's about what, 7?
Usually it's about 7, but right now we're sitting at 8.1%, which, it's a pretty good compared to a lot of mutual funds, stocks and whatnot that have been performing historically. So, I mean, everything has its ups and downs. In this graph, we can clearly see it. Yeah. So, I mean, we look at from July 16 to 17, we see a huge peak, over 30%. And then suddenly it drops to, goes negative by 12%. And it goes back up again in beginning of 2020. And right now we're below the 10-year average of 8.1%. Right now at 1.2% year over year. Again, this is why real estate investment pays off long term. You shouldn't be day trading.
Buy and hold.
Yeah, buy and hold is the name of the game. And right now, for holding, the rental rates are really good. So this is why it makes sense to invest right now as opposed to when the market is, like what it was back in February. Guys, before we go further, make sure to hit that subscribe button, like it, and share it with your friends, okay? Moving on to the months of inventory.
My favorite topic.
Exactly. So, as I've always mentioned, months of inventory. If no other home was to come on the market, how long it would take to sell the existing inventory of homes? So when the prices were crazy back in January, February, we were below 1 month of inventory. I think we hit about 2 weeks of inventory at the peak of it. And that's why there was so much upward pressure on the prices. I mean, we can see that here at the lowest point of this graph, that was January and February. Right now, we've shot up over 3 months of inventory, 3 to 4 balance. And this is why.
Well, not shot up if you think of it. It's like from February to today. So there's still quite a bit of time that elapsed for us to get here, right?
Exactly.
It wasn't like overnight.
And the reason was the interest rates and everything else that happened along the way that increased the supply and brought the demand down. Again, where it's going to go, no one knows. We have another interest rate hike. I think we kind of mentioned it last time. It was going to go over 3%. I don't see it right now with the way it is going over 4% to cross into the buyer's market. But again, it's tough to say because everything is pretty volatile at this point. Another thing that's worth mentioning, the average month of inventory for the last 10 years has been sitting at 2 months of inventory, which has been the seller's market all along in Toronto. But again, if you have 2 months, a lot of people in Toronto think it's buyer's market.
This is really specific to Toronto, having most often a seller's market. Like I'm from Montreal and we do dip into that 2 to 4 months of inventory quite a bit. So this is really true to the GTA, which I think is something worth mentioning is that we have a really strong market too, based on the months of inventory that we can keep down. So there's a lot of turnover, right?
There's a lot of demand, and it's because of it's fueled by the immigration. Job market is pretty good. But in different segments of the market, again, different segments being different types of housing. So right now, condos...
And different pockets.
And different pockets are different. But overall in GTA, condos are sitting at 3.7 months of inventory. So if someone's out there looking to buy a condo, now is a perfect time. You got plenty of choices. You got bargaining power. You go in, you take your time, you have your conditions in, and you go at it as easy as possible.
I really do want to touch on this point because you notice the last 2 years, everyone's running. People are going 200,000-300,000 over ask, and they're getting their houses where they have to redo the roof, no inspections, and they're going in.
Yeah.
And today, I have people that want to purchase and they're kind of like on the fence about it. And I'm not understanding because I'm like, you can get literally everything on your checklist. We're not in a multiple offer situation.
Exactly.
You can do your due diligence with an inspection, even have a finance clause for 2 days.
And do your certificate.
And you're sitting not doing anything?
Yeah.
I'm beside myself.
So, I mean, again, now, if someone is looking for condo, especially for investment, is a perfect time because, again, if someone's buying for themselves, they got to find the right place emotionally kind of be drawn to it. But if you're buying for investment,
cents.
It comes down to the dollars and cents, and the rental rates are high, and it's going to be going up further. So it makes sense to be buying, especially with 3.7 months of inventory. This segment of the market could go into buyer's market soon, over 4 months of inventory, which would be perfect for someone wanting to invest. Another thing worth mentioning, the average price of a condo right now is sitting below pre-pandemic levels. The average price of a condo right now is below what we had back in February of 2020, which it was nuts. So with that being said, it's a great time to be purchasing. After that, we have 3.2 months of inventory for detached homes. And at the very kind of bottom of it is semi-rows and towns at 2.5 months of inventory. Reason for that?
Yeah.
A lot of people like to, upgrade to that segment from condos because it's still more space.
Still very active.
It's pretty active still, and not a lot of supply of it out there to choose from. And when we talk about towns, usually we're talking about freehold towns and
condo towns too.
Condo towns with a little,
yeah.
Condo towns are not as much because not a lot of them are out there. So, new segment, opportunity alert.
Right. So usually we do a little bit of a news highlight, and there's not much exciting in the news right now that isn't suicidal almost. So we're going to skip it and we're going to talk about something a little bit more positive, some opportunities. I always say to my clients, especially the first-time home buyers, the first purchase that you make really sets the tone for every other house you have after that.
If you are looking for opportunities, because again, if you want to just sit on the sideline and say, listen, interest rates are going up, okay, look at how much it's adding to your payment yearly. Interest rates are going up, but if you're paying, let's say, $7,000, $10,000 more interest per year, if you're saving on the house $100,000, I mean, like right now, a lot of condos right now have come off their peak by about $100,000 for a 2-bedroom condo that's around right now $800,000. They used to be hovering around $900,000. So you're saving 100,000. You might be paying 10 to 12,000 more in interest per year. For 5 years of it, you're still ahead of the game. I want to point to a graph that clearly explains this, what I'm talking about. So we have 3 lines here. We got condo, semi-roads and towns, and detached. At the height of the market in February, the condos were sitting at $800,000. The detached was sitting at $1,797,000. Let's call it $1.8 million. So the gap between a condo and detached home was $1 million. Right now, as of last month, the average price of a condo is at $790,000. And we're sitting for a detached at $1,363,000, let's call it. So the detached has come down 24%. Condos have only come down 10%. The gap between these two have narrowed down so much so. So for detached, if you wanted to upgrade from a condo to a detached back in February, the gap was $1 million. Right now, the gap is at $644,000. If you decide to move from a condo right now to a semi or a townhouse, the gap for that is only $250,000, and that gap used to be $400,000 a few months ago. So it provides a good opportunity for someone that wants to upgrade, and you're carrying a less mortgage. Especially, it provides another opportunity with the refinance that you were mentioning.
Yeah.
Right now, if anyone's got a property that they've had it for a while, they got a lot of equity.
Pull it out, buy something. You're not even just making another move for your family, but buy an investment property.
Buy an investment property. You can refinance your property, take out $100,000, $120,000. There's plenty of condos right now that you can choose from for $500,000, $550,000.
I was just going to say that there's actually $500,000 good condos right now.
We didn't have that back in February. Right now, there's plenty. I mean, we just had one. You can buy it, let's say, for $518,000, walking distance to Ryerson or Toronto Metropolitan University.
Yes.
And rent that out, which is nuts for me to say, $2,300. And it's probably going to hit $2,400 by September, and they don't even sit on the market. These things were renting last year about $1,800. So your mortgage with 20% down is less than $3,000. So if you're renting this for $2,300, it covers your maintenance fee, your interest, and everything else goes to your principal. You're just saving it up.
So that concludes today's segment. If you guys find this useful, make sure to share, and don't forget to hit the like and subscribe button.
Thank you for watching, and we'll see you next month.